Hi everyone, Oleg Tkach here with your weekly rate update. And this week we decided to do it a little earlier because we had the CPI inflation report that came out this morning, which measures the core inflation that essentially consumers pay for products. And so there's two measurements. One is a monthly measurement, and then there's one that's a year-over-year measurement. Now, there's always forecasts of what this inflation report's going to be, and then there's actual numbers, and depending on the actual numbers versus the forecasted numbers, the market will either move up or down after that. So the numbers were predicted, the forecasted numbers were predicted to be the yearly year-over-year inflation was supposed to be 7.3% forecasted, and it came in at 7.1%, 0.2% lower. The monthly inflation was supposed to be 0.3 higher from November to December, and it came in at 0.1. So both monthly and yearly beat expectations by about 0.2%. And because of that, the market reacted very, very positively. Rates moved into definitely a more positive direction. And overall right now, from the inflation report that came out in November, you see rates continuing to come down. And the trend will hopefully, this will only add to it, and it'll hopefully continue. However, the Fed is meeting right now. They're meeting today and tomorrow. And tomorrow they're going to issue a statement. Now, that statement is going to be pretty important because it's going to be the statement that they issue for 2023, which is going to be looked at very, very carefully by investors, and it's definitely going to potentially move the market. Now, we felt like we wanted to release this video a little earlier this week instead of Friday, and because and the reason being is because the market moved a lot after the CPI report came out in a positive way. However, tomorrow we could see the market either continuing to move in a better direction where rates go down, or we could see the Fed say something that's going to contradict what investors are feeling and ultimately what they think the Fed is going to be saying, which is going to send rates in the opposite direction. Definitely two really, you could say, economic events that are happening back to back: the CPI report, the Fed meeting, that's going to really move markets, and the year-end Fed statement that's going to go into 2023. We could see a lot of volatility. So I wanted to just bring this to your guys' attention. As of right now, everything's looking positive, and it looks like it's going to continue being positive. And tomorrow, when the Fed issues their statement, if it's really in line with what investors are thinking, which is inflation continues to be better, things are continuing to get better, we're not going to go as aggressive as we thought, we're only going to raise rates by 0.5 versus 0.75%. If all that happens, we won't update you. However, if there's any major movements that we feel like the Fed's going to, makes comments that are going to move the markets, up or down, we're going to let you know with another rate update after the Fed statement. But as of right now, everything looking positive. Great news to share with buyers. The one thing that I would tell you though, as agents talking to your buyers, high rates aren't necessarily bad. It allows people to negotiate and really, as you guys know, especially the ones who recently got people under contract, I mean, you could get a lot of concessions from the seller. If rates come down way too fast, it's not going to be good for buyers. It'll be great for sellers, especially in the spring market that we see from, January till June, that hot market. We could almost relive that again depending on how fast rates come down, if they come down. Now, I think that this is a great time for us to be educating our buyers on what rates mean. As a buyer, you don't necessarily want rates to be, back into the low 4s and the 3s, as great as that sounds, because you lose your negotiating power. And I don't think enough people are really explaining that. And I think this is the time to really be that expert in your field, educate your clients, have the high-level conversations, because I don't think we're going to see a better opportunity negotiating-wise for buyers than we are in right now, and unless, of course, rates go up way higher, which, again, all up to what happens with the Fed meeting tomorrow and so forth. So we'll continue to update you. I just wanted to give you that If there's anything at all the team or I could do for you, let us know. 425-478-7676.